Yes, sir. Sir, we understood that how to compute the capital gain that is governed by section 48. Section 48 is an 8-step approach. Am I right, sir? Full value of consideration is step number 1. That is a hero. Generally, full value of consideration means actual selling price. But what this chapter capital gain is saying that, but in certain circumstances, I will not adopt full value of consideration as the actual selling price. That is what deemed consideration. What consideration? In this area, we are not talking about all the capital asset, my dear lovable students. We are talking only about the high value capital asset. What capital asset? High value capital assets such as land, building or both. High value capital assets such as unlisted share. And high value capital assets such as other asset. Other capital asset. What this area is saying that if you are transferring land, building or both, my dear lovable students, you can transfer this land, building or both either as stock in trade or you can transfer the land, building or both as capital asset. Think of a situation of CASA grant. If you are owner of the CASA grant, my dear lovable students, for you the land, building or both is a stock in trade. If you are yourself not CASA grant, other than CASA grant, if you are having land, building or both, it is a capital asset. What is the problem? Many people are transferring land, building or both. And they are transferring less than the stamp duty value. Less than the... And when they are calculating the capital gain, they are saying that I have not even received stamp duty value. I will be declaring a full value of consideration which is less than the what duty value. Government is saying that that game we don't want. If you are transferring any, sir, land, building or both for a value less than the stamp duty value, for a value, then stamp duty value should be deemed as the what value of consideration. That's what the provision we are going to discuss. This land, building or both may be stock in trade. Maybe then PGBP head will be applicable. And if the land, building or both is a capital asset, then capital gain head will be applicable. If it is PGBP, my dear lovable students, provisions of 43CA will be applicable. And if it is capital gain, provisions of 50C will be applicable. So the parallel section for 43CA is 50C and parallel section for 50C is 43CA. So that's why I'm going to talk about both the section. Actually, this section is related to PGBP and this section is related to capital gain. Comfortable? If you are selling any land, building or both as what in trade? Stock in trade. Sir, what is the asset you are going to sell? Land, building or both. And that land, building or both is a dash in trade. So first I am going to talk about CASA grant. Then the head applicable to the CASA grant will be PGBP. And the section applicable will be 43CA. Sir, I am having land, building or both, not in a sir, stock in trade. It is a what asset? Capital asset. Then dash gain will come. Capital gain will come. Then section 50C will be applicable. Simple one line summary. What is the asset you are having? Land, building or both. Is it a stock in trade? 43CA will be applicable. PGBP will be applicable. Sir, what is the asset you are having? Land, building or both. Is it a capital asset? Capital gain will be applicable. 50C will be applicable. Both the section are saying same provision. Sir, both the section are saying that if you are selling land, building or both for a value less than the stamp duty value. For example, stamp duty value is equal to 5 crore. Stamp duty value is equal to, you are selling that. The actual selling price is 3 crore, my dear lovable students. So you are selling for a value less than the what duty value? Stamp duty value. This is condition number 1. Sir, for a land, building or both, the stamp duty value set by government is 5 crore. But you are selling only for 3 crore. This is condition number 1 has been satisfied. And condition number 2, this what duty value? Stamp duty value exceeds 110% of the consideration. So 3 crore into 110% comes to 3.3 crores. Are you really with me? Is the stamp duty value 5 crore more than 3.3 crore? Condition number 2 also satisfied. If both the condition has been satisfied, when you are calculating PGBP, sale price will not be 3 crore. Sale price will be 5 crore. If you are calculating capital gain, full value of consideration will not be 3 crore. Full value of consideration will be 5 crore. So if an assessee is transferring what? For a value less than the stamp duty value, that is what condition number 1. That means if the actual selling price is more than stamp duty value, my dear lovable students, 43 CA, 50 C provision itself will not be applicable. And if the stamp duty value exceeds how much percent of consideration? This is the second condition, 110% of the consideration. Then stamp duty value should be adopted as the full value of consideration for the purpose of capital gain as per section 50C, and sale price for the purpose of PGBP as per section 28, as the case may be. Are you able to appreciate, sir? So this is what section 43CA and 50C is all about, my dear lovable students. Can I proceed? Sir, there are two types of stamp duty value are there. Sir, for example, if there is a property, assume you are going to purchase a flat. Okay. Sir, your CASA grant, assume your CASA grant, you will sell the flat, or you are normal person, sir, then also you may sell land, building, or both. Sir, today, my dear lovable students, there will be one stamp duty value. Today there will be one what duty value? Stamp duty value. Are you really with me? Sir, today's what duty value? Stamp duty value will be less. Today you entered into an agreement, my dear lovable students. After 6 months or 1 year or 2 year only you are going to transfer the property. So that's what stamp duty value as on date of transfer. Generally, stamp duty value as on date of agreement will be less than the stamp duty value as on date of transfer. Everyone will love to take stamp duty value as on date of what? Agreement, for comparison purpose, for taxability purpose. What Act is also saying that you can take stamp duty value as on date of agreement, provided if the advance has been paid by account pay check, account pay bank draft, electronic clearing system, or such other electronic mode as may be. That means two stamp duty value will be there. One is stamp duty value as on date of agreement, stamp duty value as on date of. Sir, assessee can take stamp duty value as on date of, provided if the advance has been paid by way of what paycheck, or what pay bank draft, or electronic what system, or such other electronic mode as may be. That's it. Two section done. One is section 43CA and 50C, which both are talking about what? Land, building, or. I'm coming to the next capital asset you are transferring, high value capital asset, which is nothing but unlisted shares. Sir, listed shares means it will be covered under the recognized stock exchange. So you can't sell as per your wish. But this unlisted shares is the area where next highest cheating is happening. So government said that, are you transferring unlisted share for a value less than the fair market value? Then when you are calculating the capital gain, fair market value will be deemed to be the full value of consideration. That's it, game over. Sir, where an unquoted shares, unquoted means unlisted shares, being a capital asset, that should not be your stock in trade, man. Unlisted shares should be a capital asset. Then only capital gain will come. No. Is transferred for a consideration less than what market value? So, if it is land, building, or both, stamp duty value. Hello, sir. For unquoted share, fair market value, then such fair market value shall be deemed to be full value of consideration for computing what gain? That means government's view is if you are transferring capital asset, dash gain will come. Capital gain will come. If you are transferring land, building, or both, and if you are saying that my sale price is less than the stamp duty value and stamp duty value exceeds 110% of the consideration, we will never ready to accept the actual selling price as the either selling price or full value of consideration as the case may be, as per section 43CA or 50C as the case may be. Comfortable? The another area where the cheating is happening with regard to the unlisted share. The people start selling unlisted share and they are saying that my selling price is less than what market value. So section 50CA is saying that if the capital asset transferred is an unlisted share for a value less than the fair market value, then fair market value should be treated as the full value of consideration. Now coming to the other capital asset, not land, building, or both, or unlisted share, or including land, building, or both, or unlisted shares, after you transferring the capital asset, You are saying that you are having Alzheimer's. You forget what is the full value of consideration. Government is saying that don't worry, you may forget, we will never forget. Because we have to get the capital gain. Sir, when sale consideration is not ascertainable or cannot be determined, don't worry. Fair market value of such asset as on date of transfer shall be the full value of consideration. This section 50D is not only applicable to land building or both. This section 50D is not only applicable to unlisted share. Let it be any capital asset, my dear lovable students. Sir, if it is determinable, actual selling price. If it is not determinable, fair market value. That's it with regard to the next deemed consideration section also. So what and all? 43CA, 50C, 50CA, 50D, 50. Let me ask you a very simple example to proceed the things further. Sir, you are having a residential house property. You are having, not Casa Grande. Is residential house property capital asset? When you transfer the residential house property, dash gain will come. The stamp duty value of the residential house property notified by the government is 5 crore. Hello, sir. And my dear lovable students, you have received, since you are transferring the capital asset, you have received an amount of 3 crore. So in your hand, capital gain will come or IFOS will come? Capital gain will come. Can we calculate capital gain? As per section what 8? 48. Full value of consideration. Sir, always full value of consideration is surrounded by deemed consideration. Are you all really with me? What full value of consideration concept is saying that if you are transferring land building or both for a value less than the stamp duty value, is the actual selling price less than stamp duty value? And the stamp duty value should be more than 110% of the consideration. Is second condition also satisfied? Then full value of consideration will not be 3 crore, full value of consideration will be 5 crore. This is what the provisions of FTC. Comfortable? You are saying that, sir, I only know the pain of selling this property for how much crore? 3 crore. Nobody is ready to buy this property for 3 crore. Sir, government has wrongly fixed the stamp duty value of how much crore? 5 crore. In this area, stamp duty value should only be 2.5 crore. I sold for how much crore? 3 crore. For me, deemed consideration concept itself should not be. That means you are having a remedy under section 55A, reference to the valuation officer. Reference to the, because that is the person who will put the stamp duty value. You can go and say that if the assessee is not happy with the stamp duty value, you are saying that stamp duty value will not come for 5 crore. This is a wrong figure determined by whom? Government. Don't think that government will not make mistake. The value determined by the government is wrong. Because of that wrong determination, I am, sir, here dying. Because unnecessarily I am liable to pay what gain? Capital gain. Please revise that value. Then assessee can approach the AO, assessing officer. So assessee can approach the what? AO. Then AO will approach the VO. What officer? Valuation officer. Under section what? A? 55A. Now the VO will determine the value. Now you have gone and cried before AO. AO have gone and cried before the VO, saying that 5 crore is not the what duty value. Assessee is crying, please, please, please take care of his crying. Now VO is saying that please, NSR, stop asking him to cry. The stamp duty value is not 5 crore, it is 7 crore. Are you all really with me? Valuation officer is saying that நெஞ்சில் அடிச்சு அளவு சொல்லு. ஏன் இப்படி லைட்டா எழுதிட்டு இருக்கான்? So my dear lovable students, if it is more than what duty value, stamp duty value, immediately assessee will say that எனக்கு தெரியும், அப்பவே தெரியும், AO will be right, stamp duty value will be correct only. Unnecessarily I came to the valuation officer. Please sir, his value put it on dustbin. The full value of consideration will be what duty value. Now if the valuation officer is saying that the value less than the what duty value? Stamp duty value. For example, the valuation officer is saying example 2 crore. He will not say like that. Immediately don't take 2 crore as a full value of consideration because you really received. That's why the value determined by the VO, which is 2 crore, or actual consideration, whichever is higher, should be adopted as the full value of consideration. Right, sir? Generally, when you will go to the AO and AO will run to the valuation officer. For example, sir, what is the stamp duty value? 5 crore. Is what the value determined by the government. Right, sir? But you are feeling that this is not 5 crore. This is 4 crore 99 lakh 99,999. Sir, there is a difference of how much rupees? 1 crore. 1 rupees. Just 1 rupees. You are saying that, sir, I am crying here. I want to go to the valuation officer. AO will say that, don't cry, please solve. For this and all, you can't go to the fair market value as per the AO. That is, opinion more than the value claimed by assessee. That means there should be a minimum difference of 15% claimed by the assessee. Assessee should say that, sir, your value and my value, there is a difference of 15%. This is in value. Or in amount, 25,000 rupees, there should be minimum difference. Not 1 rupee difference. Minimum 25. Whichever is lower. Either percentage wise, it should be 15%, or amount wise, 25,000. Whichever is. Any one of the conditions satisfied, AO will take you to the valuation officer. Having regard to the nature of the asset and other relevant circumstances, it is necessary to do so. He will take you to the what officer, man? Valuation officer. Sir, what is a one-line summary of the deemed consideration? Step number 1 is full value of consideration, my dear lovable students. These are the sections 43CA, 50C, 50CA and 50D, right? You tell me, under 43CA, what are the assets to be transferred? Land, building or both? As what in trade? Here, land, building or both? As, here what asset you should transfer? 50D, what asset you should transfer? All asset, where the sale consideration is not ascertainable. Comfortable? Here, condition number 1, for a value less than the what duty value? For a value less than the stamp duty value? For a value less than the fair market value? Here, value itself is not applicable. Am I right? Condition number 2, one more condition is there. Stamp duty value should be more than 110% of the. And here also, stamp duty value should be more than 110% of the. Second condition is not applicable to 50CA and 50D. Can I proceed? If two conditions has been satisfied, when you are calculating 43CA, that is PGBP, sale price is equal to what duty value? If two conditions are satisfied, when you are calculating capital gain, full value of consideration is equal to what duty value? Sir, if one condition has been satisfied, when you are calculating capital gain, full value of consideration is equal to what market value? Sir, if, sir, you transferred capital asset, but you are saying that full value of consideration is not determinable, then fair market value as on date of transfer will be the full value of consideration. Can I proceed, sir? That's it with regard to the deemed consideration. Slot 5 section, man. 43CA, 50C, 50CA, 50D, 55A. I'm coming to start with section 45 series. That is a charging section. You know, my dear lovable students, we are having how many heads of income? We are having salary, house property, PGBP, capital gain and IFOS. Section 15 is the charging section for salary. Section 22 is the charging section for house property. Section 28 is the charging section for PGBP. Section 45 is the charging section for capital gain. And section 56 is the charging section for IFOS. My dear lovable students, 45 is classified into 4 categories. 45 is classified into 45 subsection 1, 45 subsection 1A, 45 subsection 2, 45 subsection 5. These are the interrelated standards. 45 subsection 1 is a charging section, basic section. Charging section. This section is saying that first of all, there should be a capital asset. First of all, there should be a. Sir, I don't have a capital asset at all. Then don't check this head at all. First of all, you should be a capital asset. We already completed the definition of the capital asset as per 2 subsection 14. Comfortable? Sir, what I have to do with that capital asset? You should transfer that. Such capital asset should be transferred. Such capital asset should be. So first of all, you should be a, and capital asset should be, because of transferring that, you should have profits and gains. Because of the transferring that, you should have. Immediately when we hear the word profits and gains, we will assume that profits and gains of business or profession. No, even this profits and gains should also be taxable under the head what gain? Such profits and gains will be taxable under the head capital gains. Comfortable? Generally, the year of taxability is the year of transfer. Generally, in which year you have transferred the capital asset, that year you are liable to pay the capital gain. Comfortable? When you are calculating the capital gain, section 48 is the computational section. These points you should take care. What is step number 1? Full value of consideration. What is generally full value of consideration? Actual selling price. Actual received subject to what consideration? Every question you have to check that. Have you transferred land, building or both? Have you transferred unlisted share? Have you transferred other capital assets where the full value of consideration is not determinable? If it is land, building or both, you have to check that. If an asset is transferred in land, building or both for a value less than the stamp duty value and stamp duty value exceeds 110% of the consideration, then stamp duty value should be adopted as a full value of consideration. Have you transferred unlisted share for a value less than the fair market value, then fair market value should be adopted as the full value of consideration. Have you transferred any long-term capital asset for which, sir, do you have Alzheimer's with regard to full value of consideration, then fair market value should be adopted as the full value of consideration. Generally, actual selling price is the full value of consideration. Generally. But it is always subject to deemed consideration. Sir, if the asset, you have to see, man, sir, asset, when you have transferred the asset before amendment date or after amendment date. If it is after amendment date, whether it is short-term capital asset or long-term capital asset, no benefit of indexation. Are you all really with me? But if it is before amendment date, my dear lovable students, you have to classify the asset into two categories, which is short-term capital asset and the long-term capital asset. If the asset is a short-term capital asset, you have to reduce only the, sir, cost of acquisition or cost of improvement. Whereas if it is long-term capital asset, indexed cost of acquisition and indexed cost of improvement. This much truth is there because of the amendment. Are you really with me? My dear lovable students, when you are calculating the capital gain, sir, benefit of indexation will be available if the asset is a long-term capital asset. That too, if the transfer has been happened before the amendment date. That too, you are entitled to get the benefit of indexation only till the year of transfer. Am I right? Now comes to the what of holding, period of holding. Generally, whether it is before amendment or after amendment, from the date of purchase of the what asset, capital asset, till the transfer of the transfer, till the date of the transfer, you can calculate the what of holding, period of holding. And sir, what is the cost of acquisition or index cost of acquisition? The purchase cost of the capital asset will be the what of asset, cost of acquisition. And if the asset is a long-term capital asset, and if you are transferring before amendment, you can take index cost of acquisition. Comfortable? Sir, generally the gain will be taxable in the hands of the person who are transferring the what asset? Capital asset. So what 45 subsection 1 is saying that there should be a capital asset and that capital asset should be transferred. Because of the transfer, you should have profits and gains. Such profits and gains will be taxable under the head capital gain, and year of taxability is equal to year of transfer. Able to appreciate? But these three sections are against 45 subsection 1. For example, sir, you are having a capital asset. For example, is plant and machinery a capital asset? Yes, sir. That plant and machinery has been destroyed or damaged. Destroyed or? Then insurance company will pay you compensation. Let me ask you a question. Sir, if a capital asset has been destroyed or damaged, in the year of destruction, sir, you have relinquished the right of the asset. You have extinguished the right of the asset. Then the right over the asset, who will be having? Insurance company will be having. In the year of destruction, will the insurance company pay you the money? No, sir. Sir, they may give the money or they may take 1 or 2 years. Are you really with me? So, year of destruction is equal to year of transfer. But that is not equal to year of receipt of money. Then, if you are saying that in the year of destruction, pay the capital gain as per 45 subsection 1, I have to take a loan and I have to pay the capital gain. So, I can't follow 45 subsection 1. I need exception. That's why 45 subsection 1A has been created. Are you really with me? What 45 subsection 1A is saying that there should be a what asset. There you can mark plant and machinery. There is a plant and machinery. Is plant and machinery capital asset? Because any property held by an assessee, whether or not connected with his business or profession, is a capital asset. And such capital asset should be damaged or what? Destroyed. That plant and machinery has been damaged or destroyed. How, sir? Because there is a fire in the premises. Pushpana fire. Come on. Because of the reason specified in 45 subsection 1A, niyave koluthi podakudadu. Because of these reason, there is natural calamity, riot or civil disturbance, accidental fire exposure, action taken by enemy or action taken to combat an enemy. Because of these reasons, that plant and machinery has been damaged or destroyed. Damaged or destroyed. But I am a very, very, very happy person. Because such capital asset already insured. And the insurance company should what? Compensate. Insurance company should compensate. That means instead of selling outside the capital asset, sir, insurance company is going to pay me the full value of consideration. If I sell the capital asset, my dear lovable students, since the plant and machinery is a depreciable asset, section 50 will be applicable. Computation of capital gain in case of depreciable asset. I have not transferred or sold the capital asset. I have, sir, damaged or destroyed the capital asset. Who is going to compensate? Will this year they will compensate? No, sir. So 45 subsection 1 will not be applicable. 45 subsection 1A will be applicable. Are you all really with me? So the year of taxability will not be the year of transfer. Year of taxability will be the year of receipt of compensation. Year of receipt of? Okay, man. Sir, either the insurance company may give me cash. May give me, or they may give me new asset. New plant and machinery they may give. Right, sir? So what is the one line story here? You were having a plant and machinery. Yes, sir. This plant and machinery has been used for the purpose of business or profession. After 3 or 4 years, my dear lovable students, suddenly, one fire came, man. Are you really with me? This plant and machinery has been destroyed or damaged. Destroyed or? This is the year of transfer. But year of taxability is not equal to year of transfer. Can I? After 2 years or 3 years, you will receive money from the insurance company. Am I right? Sir, the year of receipt of compensation is the year of taxability. Can I? That means really capital gain arises in this year. But government, because of their big heart, is saying that don't pay capital gain in this year. Because if we ask you to pay the capital gain in this year, my dear lovable students, you have to go and take a loan. நீயே தீ பிடிச்சிருக்குன்னு சொல்லி மன கஷ்டத்தில் இருக்க, இதுக்கடையில நீ என்ன கெயின் கட்டணும்னு சொன்னா நாசமா போன்னு சொல்லுவ நீ. So government is acting like a good boy, saying that we are understanding your pain. Don't pay capital gain in this year. Pay capital gain in the year when you are receiving compensation from the. That's it. That's what 45 subsection 1A. So I am not going to calculate capital gain here. I am going to calculate capital gain here. Now, what is the full value of consideration? If the insurance company given consideration in cash, means consideration value is equal to cash. If they give 5 lakh, 5 lakh is the full value of consideration. Sir, they have gave me a new plant and machinery, sir. Then take the fair market value of the new plant and machinery. If these rules and regulations are not there, you will say that, sir, my plant and machinery has been destroyed and I got new plant and machinery. Hello? Hello? That means what is the full value of consideration is not determinable. Don't worry. Section 50D will be applicable. What is the full value of consideration? Take the fair market value of the asset received. Are you all really with me? Indirectly, they incorporated 50D into the provision. And next one, benefit of indexation. You tell me, if the asset is a long-term capital asset, before amendment, will you take benefit of indexation? You are taking benefit of indexation till the year of calculation. Government is saying that. Because capital gain is only up to this. Only the payment of capital gain deferred. Calculation is not deferred. You are not entitled to enjoy the benefit of indexation till the year of receipt of compensation from the insurance company. Am I right? And period of holding. Sir, from the date of purchase of the asset till the date of till that only date only you can take the NSR period of holding. Because after this period you don't have the what asset at all. That capital asset has been taken over by the insurance company. Comfortable? And cost of acquisition or index cost of acquisition, sir, you know for what price it has been purchased. That purchase price of the capital asset can be taken as the cost of acquisition. But if that asset is a depreciable asset, WDV should be reduced while calculating the capital gain as per section 50. Comfortable? Sir, it is taxable in whose answer? In the insured person's answer. Because only insured person will get the money, no. He will be having the money, no. Letting pay the capital gain. That's what 45 subsection what? 1A. So it is against 45 subsection 1. Because 45 subsection 1 is saying that year of taxability is the Year of transfer. 45 subsection 1A is saying that year of taxability is not the year of transfer. Year of taxability is the year of receipt of compensation from the insurance company. Comfortable? Sir, assume that you are having 5000 kg of jewelry in your home. Hello, sir. Immediately don't ask me a question, then why I am coming to study CA. My dear lovable students, when this jewelry is there in your home, is it a capital asset or stock in trade? Capital asset. Are you all really with me? Immediately you are having a thought that you are going to start a jewelry shop. You keep your name, man. For example, I am going to start a jewelry shop called as ANM Jewelers. Are you all really with me? Yes, sir. ANM Jewelers. I am having 5000 kg jewelry in my home. Example only. I am taking that 5000 kg of jewelry from my home and I am keeping that jewelry in the shop. Are you all really with me? When it was in home, it is a dash asset. Now it is in shop, it is a what? Sir, conversion of capital asset into stock in trade is a transfer as per 2 subsection 47. Correct? Now where the jewelry is? Shop. Now I will be, sir, selling that jewelry from shop. If I sell, PGBP will come. Sir, if I keep the jewelry in shop, today itself the jewelry will sell. No, sir, but transfer happened today itself. If government is asking me to pay the capital gain today itself, I have to go and take a loan from bank to pay the capital gain tax. Correct? So government is indirectly giving an option that don't pay the capital gain today. Pay the capital gain in the year of sale. Because in the year of sale, my dear lovable students, you will be getting income. At that time, pay the tax. Sir, you purchase 5000 kg of jewelry. You really purchased for example, 50 lakhs. Very long back, because at that time and all jewelry was NSR very cheap. Hello. And when you keep the jewelry in the shop, will it be 50 lakh or the value increase? It become 500 lakhs. Are you really with me? Sir, that day itself you sold, you took some extra time. Sir, when you sell the jewelry, it has become 750 lakh. Are you really with me? From the date of purchase of jewelry till the date of keeping the jewelry in the shop, then only it is capital asset. From the date of kept in the shop till the date of sale, it is a stock in trade. That means what they are saying is this gap, which is 500 lakhs minus 50 lakhs, comes to 450 lakhs will be taxable under the head capital gain. And this gap, 750 lakhs minus 500 lakhs, what is the gap? 250 lakh will be taxable under the head PGBP. Are you all really with me? Nothing, man. You really purchased for how much lakh? 50 lakhs. You really sold for how much lakh? 750 lakhs. That means 750 lakhs minus 50 lakhs is equal to 700 lakhs is the total profit. Am I right? This 700 lakh will not be taxable under one head of income. It will be taxable under capital gain and what? That is capital gain 450 lakh will be taxable and PGBP 250 lakhs will be taxable. 450 plus 250 comes to 700 lakhs is the total taxability. That means if you are converting a capital asset into stock in trade, always the income will be taxable under how many heads of income? That's why 45 subsection 2 income should be taxable under 2 heads of income. Comfortable? Come on, conversion of capital asset into what in trade? Stock in trade. There should be a what asset? Yes, jewelry. In my home, I was having jewelry. Such capital asset should be converted into what in trade? I have to take the jewelry from my home and I have to keep in my, sir, shop. Such conversion is a transfer under section 2 subsection what 47. Always this income will be taxed under 2 heads of income. What is capital gain and what? PGBP. And year of taxability is the year in which the converted asset is sold. Comfortable? How to compute the capital gain, sir? At the time of conversion, dash gain will come. But don't pay the capital gain that time. You can defer the capital gain and you have to sell only at the time of sale. Sir, full value of consideration is equal to fair market value as on date of conversion. Look at here. What was the fair market value as on date of conversion? 500 lakh. Less cost is what cost? Actual cost. For how much rupees you purchase? 50 lakhs. So 500 minus 50, 450 lakhs will be taxable as capital gain. Comfortable? But at the time of sale, what will come? PGBP will come. What is the selling price? Actual sales value. For how much rupees you are selling in the shop? 750 lakhs. So that you have to take as a selling price minus fair market value as on date of conversion. Comfortable? So here, from this point to this point only capital gain will come. But you calculating capital gain on this point. Are you all really with me? Adhikin benefit of indexation cannot be enjoyed till the year of sale. Benefit of indexation can be enjoyed only till the year of conversion. So full value of consideration. What is the full value of consideration? Fair market value as on date of conversion. Why? Because since I am taking the jewelry from home and keeping in the shop, I am not getting any money immediately. So I have to take the fair market value. So indirectly I am taking deemed consideration. But this deemed consideration is not covered in the above deemed consideration. Are you really with me? Benefit of indexation till the date of conversion of capital asset into what in trade? That means benefit of indexation will be available only till this date. Are you all really with me? Period of holding, sir, from the real date of purchase of the jewelry till the conversion of capital asset into what in trade. Only this period you are supposed to take the period of holding. This period should not be included. Comfortable? And cost of acquisition or cost of improvement, purchase cost of the capital asset, and it is taxable in the hands of the transferor. Comfortable? That's it, my dear lovable students. The second exception also comes to an end. 45 subsection 2, conversion of capital asset into. Coming to 45 subsection 5, compulsory acquisition of land and building. Compulsory acquisition of? Sir, you are having a capital asset, sir. Your capital asset is land, building, or both, sir. Are you all really with me? Sir, this land, building, or both has been compulsory acquired by the government of India. For what purpose, sir? To put an NH highway, sir. Are you all really with me? They said that we want this land, building, or both to put NH highway, to extend NH highway. You tell me, if government take land, building, or both as compulsory acquisition, today itself will they give consideration? Why pay Raja? Chance sale. You know, for this land, building, or both, this is your land. The ground value in your area is 5 crore. Government said that we are taking your land, building, or both. That time itself you said that please don't take. Because this is my land, building, or both. Because here only your house property is there. Are you really with me? Yes, sir. But still government putting it on. And you are saying that I don't have any istam. Government saying that. That's why we amended the definition of the transfer. In the definition of transfer as per section 2 subsection 47, compulsory acquisition under any law is also a transfer. Are you all really with me? Okay, sir. Fantastic, sir. For this, government gave you a consideration of 2 crore. The generally ground value 5 crore, but government gave only 2 crore. I love you, the government. Ganda. Gand. I am supposed to get 5 crores, but I got only. Surely I will give, sir, case, give a case against the government. And I will say that, pour out home, pour out home, pour out home, pour out home. Are you really with me? And government, after certain number of years, 5 years, 10 years, or 15 years, to my son or son or sons, as the case may be, they will say that, yes, you are correct. You are entitled to get the additional compensation. What? Additional compensation of 3 crores. That they are giving after 15 years, my dear lovable students. I am saying to the government that you gave me only how much crore? This is original compensation. This is, and you are going to give me 3 crore after. If this 3 crore, if you give me 15 years before, I would have put an FD. From that FD, I would have got what? Interest. Are you really with me? So you should not pay me 3 crore. I want additional compensation plus interest on enhanced compensation. Interest on. So these are the components, man. 3 components will be there, my dear lovable students. Number 1, original compensation. Number 2, enhanced compensation. Number 3, interest on enhanced compensation. Are you really with me? What is the original compensation? 2 crores. What is the enhanced compensation? 3 crore. Assume interest on enhanced compensation is 2.5 crore. Are you really with me? Is this interest? Generally, if you get an interest, my dear lovable students, it will be taxable under the header. The same way, sir, it will be taxable under IFOS, under section 56, subsection 2, class 8. Class 8. Are you really with me? This will be taxable. And when you are taxable interest on enhanced compensation, you can reduce a flat deduction of how much percent? 50%. As per 57 clause 4, are you all really with me? The remaining amount will be taxable under the head income from other sources. Whether you incurred the expenditure, whether you don't incur the expenditure, it's like 30% flat ad hoc as per IFHP. The same way, 50% you can claim. 50% you can claim. So what is that? Taxing section 56 subsection to class 8. 8. What is the 50% of 8? That's why 57 clause 4, they are giving deduction, sir, as per 57. You can correct it. You can go and check in the IFOS. You will be getting the right answer. Sir, both this original compensation and enhanced compensation will be taxable under the head what? Capital gain. Under section 45 subsection 5. Hello, sir. Sir, why, sir, 45 subsection 5? Yana putting it anga. 45 subsection? Compulsory acquisition of land and building. That's why this charging section they kept. Are you really with me? Sir, why, sir, 45 subsection 1A? Because tea pudike my plant and machinery pochda. And they give new asset. A stands for asset. 45 subsection 1A, they will give you asset. Correct? 45 subsection 2, conversion of capital asset into stock in trade. Always the income will be taxed under 2 heads of income. That's why 45 subsection 2, comfortable. 45 subsection 5, compulsory acquisition of land and building. Comfortable. Sir, they gave me only 2 crore. You tell me, happy or sad or ganda? Kolla gandal irukang, kollama vidamata. That's why I gave to the case. This 2 crore, government said that we will pay you 20 lakh for 10 installments. Are you all really with me? Kudukkarade 2 kodi. Adume 20 lakhs for. And government is saying that there should be a capital asset. Do you have land building or both? Such capital asset should be pudunganu. Compulsory acquisition. Are you really with me? Now the government is going to pay me compensation. What compensation? What compensation? Is it an income to me or expense to me? That income should be taxable under the head capital gain. For that, government has to deduct TDS under 194 ELA because love is absent. Are you all really with me? They will be deducting TDS under 194 ELA because pudungrangada, love is absent. Are you all really with me? And this original compensation, sir, of how much crore? 2 crore. And enhanced compensation of 3 crore will be taxable under the head capital gain. Sir, when the original compensation will be taxable? Whole amount is taxable. How much crore? In the year of what received? First year received. First I received only 20 lakh. Still full value of consideration will be 2 crore. Comfortable. Whereas enhanced compensation, when only it will be taxable? Year of actual receipt. Because even God knows. God don't know that whether I will get the enhanced compensation or not. எப்போ வருதோ அப்ப என்ன கட்டினா போதும். முன்னாடியே அட்வான்ஸ் டாக்ஸ் எல்லாம் நீ கட்ட வேண்டிய அவசியம் இல்லை. Are you all really with me? Now sir, how to compute the capital gain? Full value of consideration is the value of compensation received. How much crore? 2 crore or 5 crore as the benefit of indexation. Sir, I purchase land and building, sir. It is pudungal by the government, sir. Yes, sir. After compulsory acquisition, this is the year of compulsory acquisition, sir. Yes, sir. That year itself compensation will come. Original compensation itself will not come. Correct? Yes, sir. Sir, this is the year of transfer, sir. But I received the compensation only after 3 years, sir. If government is asking that year of taxability is the year of transfer, this year I have to pay the capital gain. Ille naale, sir, mana varthathil irukkan nanu. ஏன்னா என் வீடு பக்கத்தில் இருக்கிற லேண்ட் அண்ட் பில்டிங் நீ புடிங்கிட்டு போயிட்ட. கரெக்ட். அது வெளியே வித்திருந்தா எனக்கு எத்தனை கோடி வந்திருக்கும்? 5 கோடி வந்திருக்கும் கிரவுண்டுக்கு. அதுக்கு நீ கொடுத்ததே 2 கோடி. அதுவும் வரல. அதுவே 10 இன்ஸ்டால்மெண்டா தான் கொடுக்க போற. 3 வருஷத்துக்கு அப்புறம் தான் வரப்போகுது எனக்கு. அப்ப இப்பவே என்ன கட்டுன்னு சொன்னா? டாக்ஸ் கட்டுன்னு சொன்னா. ஹலோ சார், மைக்ல நான் எதுவும் சொல்லல. கம் ஆன். Fantastic to the core. So benefit of indexation will be available till the date of what acquisition? Only for this period you are entitled to enjoy the benefit of indexation. This period you are not entitled to enjoy the benefit of indexation. From period of holding also, from the date of purchase till this date only you are entitled to enjoy the period of holding. Cost of acquisition you would have really purchased that and it is taxable in the hands of the original holder of the what asset? Capital asset. Because in that guy only capital gain arises. Comfortable. And in future, you may get the what compensation. If the court award enhanced compensation that is higher than the original, such enhanced compensation is taxable in the year of receipt. Very important point, man. When you calculate or when you tax the original compensation, you would have taken full value of consideration, which is how much crore? 2 crore. Am I right? Less what of acquisition? Is the cost of acquisition of this land building or both? 100% of the cost of acquisition you would have reduced against the original compensation itself. In future, you are getting enhanced compensation of 3 crore. Less again, if you reduce cost of acquisition, it will be a double deduction. So, always the cost of acquisition against the enhanced compensation will be nil. Logic, are you able to appreciate? And, sir, interim compensation taxability. Sometimes, sir, look at here. How much original compensation you received? 2 crores. Are you happy, sad? You would have gone to the court. Court said that, please give a enhanced compensation of 20 crore. Government is asking that. Court, good morning. We already gave 2 crore. We are able to give only 3 crore. Now, government is gone against the court. So, against this interim order, government is saying that we can't pay how much crore? 20 crore. We are going to the Supreme Court. And Supreme Court will pass the final order. Supreme Court will pass the... So, interim compensation taxability means an interim order has been passed by High Court. High Court said that how much crores should be given as compensation? Not taxable in the year of receiving, but taxable in the year of determining the dash compensation. So, if there is any interim compensation received, don't pay the tax in the year of receipt of the interim compensation. Pay the tax only in the year of the receipt of the final compensation. Reduction in the what compensation? Enhanced compensation. In future, if the compensation is later reduced by a court, tribunal, authority, capital gain of that year are recomputed. So, sometimes 3 crore rupees is the capital gain additional compensation. I would have paid capital gain for 3 crore. Am I right? In after 1 or 2 years, government is coming and saying that 3 crore is extra paid. You have to return back 50 lakh. Okay, I have to return back 50 lakh and I have to recalculate the capital gain. If I paid extra, government will refund the money also. And what is the death of the transferor? If the transferor dies before receiving what compensation? Sure, this will happen in India. Because original compensation first we will get. After how many years, sir, we will get enhanced? Don't know. By that time the owner would have died. Then the amount is taxable in the hands of the recipient. Generally, it will be the legal heirs. His son, daughter, etc., etc. So, in their hands, taxability will come. So, 45 subsection 1 is saying that year of taxability is the year of, whereas 45 subsection 1A is saying that year of taxability is not the year of transfer. It is the year of receipt of consideration from the 45 subsection 2 is saying that year of taxability is not the year of transfer. It is the year of conversion of capital asset into 45 subsection 5 is saying that year of transfer is not the year of transfer. It is the receipt of compulsory compensation for compulsory acquisition of land and building. That's it with regard to the 45 series, which is 45 subsection 1, 45 subsection 1A, 45 subsection 2 and 45 subsection 5. Are you all really with me?